Everyone, I'm Pratap here. Lesson 11 is the first lesson in second phase of the training program. In case if you did not complete the first phase of our training program in supply and demand zone price action, please get into NeoStock YouTube homepage and click on this homepage and scroll down to the playlist supply demand zone price action course. So click on this playlist. You can identify all the lessons under this playlist, starting from lesson 1.1, 1.2, 1.3, lesson 2, lesson 3, lesson 4, until lesson 10. All the lessons related to the phase 1 training program is available. And the 4 parts in lesson 9 are all the practical sessions related to the phase 1 of supply demand zone price action theory. So please complete all these lessons. I will also provide this playlist link in the video description. So you can also access the link by click on the link, so you can get into the playlist. So please look for the link in the video description of this YouTube video. So let's go back to our lesson. Market dimensions. This is the first part of lesson 11, and which is the first lesson in the second phase of our training program. So let us understand market dimensions. Please look into this chart. Now this chart is forming lower highs and lower lows. Lower high, lower low. Lower high and lower low. Now can you tell me the trend of this particular chart? What could be the trend of this chart? When lower highs and lower lows are formed, what could be the trend? So you all might say the trend of this stock is a downtrend. Am I right? But I am denying. I am saying the trend of this stock is uptrend. How it is possible? What we need to qualify the trend of the stock as an uptrend? A stock should have higher highs and higher lows. Then how can I say the trend of the stock is uptrend when you are saying the trend of the stock is downtrend? Is it possible? I am saying currently the trend of the stock is uptrend, but you are saying the trend of the stock is downtrend. It is possible because market often trend in more than one direction at the same time. One stock can have more than one trend at the same time. How it is possible? And it is possible if you understand market dimensions. So what is market dimension? You might say, in some of the movies we have seen a parallel universe. We are living in our universe, and a similar kind of us. With the same person, same name, probably they will be living in another universe also. But they might lead a different lifestyle. Exactly the same way, is this chart or is this stock trading in another universe, parallel universe? In our universe, this stock is in downtrend. In another universe, this stock will be trending in uptrend. Is it something like that? I say it is not like that. I say in our universe, or in our country, India, or in the stock exchange, national stock exchange. Assume the name of the stock is Reliance Industries. And today, at the same price, on the same day, at the same time, I am saying it is trending in downtrend, but you are saying it is trending in uptrend. Or you are saying it is trending in downtrend, but I am saying it is trending in uptrend. How it is possible? And some of our viewers are from US, or you might say a stock called IBM, trading in New York Stock Exchange. At this point of time, you are saying the trend of the stock is downtrend, but I am saying the trend of the IBM is uptrend. How it is possible? Exactly in some other stock market, in some other country, this stock is trending in downtrend, and you are saying the trend of the stock is downtrend, but I am saying the trend of the stock is uptrend. How it is possible? That's why the statement says market often trend in more than one direction at the same time. So what exactly the meaning? For that, you need to understand the dimensions of the market. In one dimension, you are looking into the stock market in one dimension. In your dimension, this particular stock is trending down. But I am looking into this stock in a different dimension. In that dimension, I am seeing the stock movement as an uptrend. How it is possible? So for that, look into this chart. Look into the circle I marked. You are looking to this entire chart, and then you are saying the trend of the stock is downtrend. But I am looking to only the chart marked in the circle area. And look into that, I am saying it is uptrend. But still we didn't have clarity by looking to this circled area. So for that, to understand, you need to zoom. So let me zoom the area. And let us understand within this zoomed area how the stock is flowing or moving. See, now there is a higher high, lower, higher low, higher high, higher low, higher high, higher low. When higher highs and higher lows are getting, what is the trend? The trend is uptrend. That's why I am saying the trend of the stock is uptrend. But you are looking to this entire chart and you are saying it is downtrend. But I am looking into a small portion of this particular chart and I zoomed in this area and then I am analyzing this chart and I am saying the trend of the stock is uptrend. That is the reason why we always say market often trend in more than one direction at the same time. Maybe some other person may zoom this area. Within the zoomed area, the latest, whatever a small portion I am taking within this area. And further I zoom, and the other person who zoomed this small portion might say the stock is trending in sideways. That is also possible. That's why the dimension, understanding the dimension of the market is very, very important. And whatever the chart you are seeing, the entire chart, we can say the trend is primary trend. Whatever I zoomed in this area, the zoomed area, whatever the chart I am seeing, that I can say it is secondary trend. So when a market is having primary trend as a downtrend, but its secondary trend as an uptrend, that is possible. Now a person might have zoomed a small portion in this particular. In that small portion, the stock might look like a sideways trend. And whatever he zoomed in, that is going to be a secondary trend. And this is this zoomed area, whatever the chart I am seeing, that could be a primary trend for me. For the other person, that is a secondary trend. That's why primary and secondary will be changing based on the way how we are looking into the charts. So in this example, the one we are seeing is the primary trend. The zoomed area, we are seeing this is a secondary trend. Within the zoomed area, further if you zoom, that is going to be the secondary trend. And this one, the zoomed area, whatever we are currently saying secondary trend, that should be the primary trend. That is the way from one dimension to another dimension, the way how you are looking to the chart will be changing as a primary trend to secondary trend. Again, secondary trend could be a primary trend. Further you zoomed in further, it could be a secondary trend. And the primary trend, whatever you are seeing, that is called longer duration trend. The secondary trend, what you are seeing, that is called as a shorter duration trend. The primary trend is called as a longer duration trend and the secondary trend is called as a shorter duration trend. And understanding the word duration is very, very important. Please focus on that. Longer duration and shorter duration. The word duration is very, very important because it is having a technical name. That technical name is time frame. So longer time frame trend and shorter time frame trend. That is the way we can pronounce. Instead of saying longer duration, we can say longer time frame. So those who are learning the concept time frame first time, you should memorize the word time frame. So let us understand what is time frame. A time frame is a time interval used for representing the price movement in the form of OHLC candles. We already learned OHLC candles in detail with examples in our first lesson, the second part of the first lesson as part of the phase 1 training program. So we all know what exactly a OHLC candle. But what is the duration of that OHLC candle? That is defined by the time frame. The duration could be only for 15 minutes duration, the candle duration. Within that 15 minutes duration, what is the open price, what is the high price, what is the low price, and what is the close price? Or maybe the duration could be 60 minutes duration, that is 1 hour. Within that 1 hour, what is the open price, or what is the high price, or what is the low price, what is the close price? Exactly the same way, the duration could be 1 day. Within the day, that is within the trading day, what is the open price, what is the close price, what is the high price, what is the low price? So the duration of the candle is nothing but a time frame. So based on the time frames, we can define the candles. So that is the reason why time frames can be categorized based on month-wise or week-wise or day-wise or even hour-wise and even minute-wise. These are the different ways we can define the duration. So these durations in technical term we are calling as a time frame. So within a month, what is my candle's open price? What is my candle's high price? What is my candle's low price? What is my candle's close price? That is the way I want to look into the chart. So every month one candle will be there in my chart. So such kind of charts you can say monthly charts. If I want to look into the candles in my chart as week-wise, every week one candle I want. During the week open, what is the open price? During the week ending, what is the closing price? During that week, what is the highest price? What is the lowest price? I want to represent all these 4 parameters in the OHLC candle. So now in my chart, all the candles are having week-wise candles. So that is the reason why time frame always tells you what kind of chart it is and what kind of candles that particular chart is having. So that is the reason why understanding the time frames are very, very important. So let us look into all the popular time frames. We have already categorized month-wise, week-wise, day-wise, hour-wise and minute-wise. So let us look into the subcategories. Within the month-wise, we have four important categories. The first one is 12-month. That is, in technical term, yearly. The time frame is yearly. Yearly means 12 months candle. For every 12 months, we are defining one candle. And that candle is named as yearly candle. That means yearly time frame candle. The time frame is yearly. That is the way you have to understand. Exactly the same way, we can also define 6 months wise. Every 6 months you can define one candle. And in technical terms, the 6 months is called half yearly time frame candle. So in the chart, all the candles are 6 months candles. That is a half yearly time frame candles. Similarly, you can also define 3 months wise. And in technical term, we call it as quarterly time frame candles. So every candle in that particular chart will be having quarterly candles. That is 3 months wise candles. Every 3 months, what is the open price, what is the high price, what is the low price, and what is the closing price. That is what our OHLC means. That is what we learned about OHLC candles. And the fourth category is monthly candles. That means 1 month candles. Every month we will be getting a new candle in the chart. So that chart is called monthly time frame candles. And week-wise, we have only one type. Always we say weekly chart. That means 1 week chart. Daily also we have only one category. Day-wise charts will be having a daily time frame candles. Previously weekly time frame candle, now daily time frame candle. And all the examples you have seen in phase 1 training program in your practical sessions, they are all daily candles. And all those charts are daily charts. Because I haven't introduced the concept time frame, I didn't get into a different time frames related charts during our phase 1 training program. Now it is the time we will look into a different charts with different time frames. How charts will be changing from one time frame to another time frame. That everything we will analyze as part of this second phase of the training program. So day wise. Next category is hour wise. Hour wise, we have three important categories. One is 4 hourly time frame charts. Another one is 2 hourly time frame chart. And another one is hourly time frame charts. Hourly time frame is only 1 hour. And these three time frames we will be using in the global charts. All the three time frames. But when it comes to Indian stock market, 4 hourly is not suitable because Indian stock market is running only for 6 hours and 15 minutes within a day. That's why we prefer only 2 hourly chart and hourly charts in Indian stock market. But when you look into the global charts, the time duration, the trading hours time duration is more in most of the global stocks. Especially some of the markets like currency market and many stock exchanges, currency market will be running 24 hours a day, or even commodities markets also they run for longer duration time. So those charts 4 hourly is useful, but when you look into Indian equity stock market, because the duration is only 6 hours 15 minutes per day. We focus mainly on 2 hourly and hourly, and we won't use 4 hourly. Just remember that point. And the last category is minute wise. And minute wise, the popular timings are 30 minutes candles, 15 minutes candle charts, 5 minutes candle charts, even 1 minute candle charts we will use. But when it comes to demand and supply zone, in the initial stage, until you get a lot of experience or very good experience, let us don't look into 1 minute charts. To avoid mistakes, many mistakes, we don't look in because it is a very narrow time frame level. A lot of experience is required to understand the price movement at 1 minute level. So during the course, we will focus up to 5 minutes level in our supply demand zone price action course. Once you get good experience, you can focus on 1 minute time frame as well. So, but otherwise, as a whole, these time frames are very important for analyzing the charts. So, if you look into this trading view, look into this chart. This is the Nifty 50 index for National Stock Exchange in India. And which time frame it is having? By default, the chart will be opened in daily time frame, because all these days we have practiced on all our exercises we practiced on the daily charts. So how do we know this is a daily chart? Here you can see the title, Nifty 50 Index 1D, NSE 1D indicates 1 day. By default, daily charts are 1 day charts. And the same thing a little above, you can also see a letter D. So let me mark a circle there. Are you able to see the D within this circle? That indicates it is a daily. Why we marked this circle? If you click in this area, circled area, all the time frames will be displayed in trading view. So if you click, see below the D, you are getting a menu. All these in this menu, you are seeing different menu items. So we have 1 minute chart, 3 minutes charts, 5 minutes charts, 15 minutes, 30 minutes, 45 minutes. Trading view is providing. And otherwise, it is providing 1 hour, 2 hour, 3 hour, and 4 hours. And day wise, it is displaying 1 day, 1 week, 1 month, 3 months, 6 months, and 12 months. And ranges, forget about these ranges, they are not related to candlestick charts, just ignore. But below these ranges, are you seeing a customization? Suppose you want 75 minutes time frame. So in place of 1, type 75 and minutes is there, and click the add button. The moment you click on this add button, 75 minutes will be added into this menu. But remember, this feature does not work in free version, because most of us are using the free version. And this customization is available only in the paid versions. Whoever took the paid version, this feature is enabled. The moment you click add, whatever the time frame you added here, that will be added into this. In free version, whatever the defaults trading view has provided, you can use only those time frames. Changing your required minute wise cannot be possible in free version. This is one point everybody should remember. Okay, otherwise, now I want to look into the 15 minutes chart, because all these days we have seen daily charts. So if you want to look into the 15 minutes chart, click on this 15 minutes. The moment you click on this 15 minutes, now 15 minutes chart will be displayed for a Nifty 50 index in National Stock Exchange, India. Any chart, if you have a favorite chart, you know how to open your one favorite chart. We already seen in the phase 1 of our practicals training program. So open your chart and open the chart in different time frames. Now the same Nifty 50 in this example what I am showing you. Now the chart is changed to 15 minutes level. That means every candle in this chart is having a 15 minutes duration. After 15 minutes, a new candle is coming. After another 15 minutes, another new candle you are getting. Again after 15 minutes, another candle. After 15 minutes, another candle. After 15 minutes, this big rally candle. Next 15 minutes, another big rally candle. See here. So that means every 15 minutes we are getting a new candles. That is what the meaning of 15 minutes time frame. Every 15 minutes we get a new 15 minutes candle. If it is a 30 minutes, every 13 minutes you will be getting a new 30 minutes candle. If it is a 2 hours, every 2 hours you will be getting one new 2-hour candle. So that is the way the candles will be changed when you are changing time frames. Okay, now what you can do? In this 15 minutes, you can look into the demand zones and supply zones. You know how to draw the demand zone. You know how to draw the supply zone. You just draw the demand zones and supply zones on the 15 minutes time frames. This is the way you can practice after this lesson. Okay, now again I want to change the time frame. What I have to do? Again I have to click on this 15M. Let me mark a circle there. There you click. Now again the menu items will be displayed. See in this menu list now currently it is displaying the 15 minutes because this is the one selected one. Now if you want to change to 2 hours, come down in the under hours, you have 2 hours. Click on the 2 hours. Now chart is changed to 2 hours chart. Now all these candles are 2 hours chart candles. Every 2 hours the candles are changing. So this is how you can change different time frames within the trading view. So by changing the time frames, you can draw the demand zones and supply zones. So time frame, Indian equity market. We know Indian equity market operates between 9:15 to 15:30 hours. That means morning 9:15 a.m. to afternoon 3 o'clock 30 minutes. That is what 15 hours 30 minutes. So what is the duration? So the total trading hours in a day are 6 hours and 15 minutes. The total duration. Converting daily data into 2 hours data. What is daily data? Morning 9:15 to afternoon 3:30 p.m. That is 15 hours 30 minutes. Till that time, whatever the trading day is there, those total number of hours is daily data. And if you want to convert the daily data into hour-wise data, how many hours? 2 hours. So 2 hours means 120 minutes. Then your chart will be having every day 4 candles, new candles. Instead of one daily candle, we get 4 candles for defining 2-hour chart instead of daily chart. So one daily candle is converted to 4 candles related to 2 hours. But here we have a problem. So what is that problem? First 3 candles are 120 minutes duration. But the 4th candle is only 15 minutes duration. This 15 minutes duration candle is because Indian stock market is having a total trading hours 6 hours and 15 minutes. Within these 6 hours, first 2 hours we are getting a 2-hour candle. Next 2 hours we are getting another 2-hour candle. And again next 2 hours we are getting another, the third one, another 2-hour candle. After that, what is the remaining time? 15 minutes only. And the 15 minutes is resulted as a 2-hour candle, but actually it is not 2-hour candle, it is only 15 minutes candle, the leftover time. That's why this is called a residual candle. Residual means leftover time or the remaining time. Whatever is left, that is called residual. So we can say in technical terms it is a residual candle, that is a leftover candle. And this leftover candle does not matching to 2 hours duration. If it does not match the 2 hours duration, how the candle looks like? Always the candle looks like a small candle, tiny candle. Let me show you in the chart. Previously we have seen this 2-hour chart for Nifty 50. See, look into this. It is a small tiny candle in this circled area. After every 3 candles, again here you have small tiny candle. Again after 3 candles, you have a small tiny candle. Again after 3 candles, we have a small tiny. So let me show you few candles in this chart. See, this is a small tiny candle. This is a small tiny candle. This is a small tiny candle. That means the last 15 minutes candle on 2 hours chart will result as a small tiny candle always or most of the times. So do we get any problem because of this? Yes, definitely we get some problem in our analysis. So let me show you. Look into this. If you want to draw a demand zone or supply zone, in this example supply zone, we have a rally candle. This is a leg candle, the green color one. It is a ERC candle. It is not a base candle because the length is high. It is a ERC candle followed by a small tiny candle, because a small candle always we consider that as a base candle. And then we have a drop candle. So rally, base, drop. So how the zone looks like? Something like this. We have a rally candle and we have a base candle and then we have a drop candle. But is it really a 2-hour base candle? No, it is not a 2-hour base candle. It is only 15 minutes base candle, which is a residual candle. That means a leftover candle. And a leftover candle should not be considered as your part of your base. But in a wrong way, what we are doing? We are analyzing this chart. See how easily prices broke this zone? Because this is not a valid supply zone. In your supply zone, all the candles should be with 2 hours candles. Then how to solve this problem? We have a temporary solution. It is not a permanent solution. We have one temporary solution. Of course, we have one permanent solution is also there that we will discuss later. So what is the temporary solution? Wherever the 15 minutes tiny candle is there, at what time we get this tiny candle? At 15 hours 15 minutes. See here, Wednesday 25th October 23, 15 hours 15 minutes, the duration of this candle. Look into these dotted lines. Currently we pointed on this particular candle. So whenever the 15 hours 15 minutes candle, that means that 3 o'clock 15 minutes, afternoon 3 o'clock 15 minutes, whatever the candle is there, just ignore that candle. Or you can assume that candle is part of the previous candle, because the duration is only 15 minutes. You can assume that is just part of the previous candle. That way you can ignore that candle. If you ignore this candle, how the structure looks like? We have a drop candle. That means it is a leg candle. The next one is also a leg candle. And this tiny candle is a 3 o'clock 15 minutes, afternoon 3 o'clock 15 minutes candle. We just ignored it. That means we are assuming there is no candle at all. And next candle is also leg candle. How many leg candles we have? We have a leg candle 1, leg candle 2 and leg candle 3. Is there any base candle if you ignore the small one? No, there is no more a base candle. When there is no base candle, can you create a zone, supply zone? or a demand zone? Can you create any zone there? No, we cannot. In order to create a zone or in order to form a zone, minimum at least one base candle is there. But the 15 hours, 15 minutes candle, we are just ignoring. We are assuming it is not there. Or we are assuming that candle is part of the previous candle. Because it is a residual candle. Residual means a leftover time candle. But that is not really a 2 hours candle. That way you can assume and then you can draw the zones. Look into the previous one. Here we have a drop candle and we have a leftover candle is there, the teeny small green color candle. Just ignore that candle or assume that candle is also part of the previous candle. If you don't ignore, it looks like two candles are there, base candles. But if you ignore, we have only one base candle. That means we have a drop candle, we have a base candle, again we have a drop candle. So ignore this circle, whatever the teeny one is there, just ignore. If you ignore, we have a drop, we have a base and we have a drop. Now you draw the supply zone. So your zone is having only one base candle, that is 2 hour base candle. The 15 minutes candle, we just ignored it. Or we are assuming that 15 minutes candle is just part of the previous candle. That means every time when you draw the zone, you need to check, is there any 15 hours, 15 minutes candle is there or not? You have to check. And by checking only, you have to draw the zone. If only one candle is there in the base, and if that candle is a 15 hours, 15 minutes, you should not draw the zone. Other than that candle, if you have one more candle, then you can draw the zone. See here, we ignored in this example, we ignored and we have drawn the zone. Because this is a valid supply zone. See, next time when prices are approached, almost came very close, maybe few points below, because it is a supply zone. Near the supply zone area, the pending orders will be there, very strong. Just before entering into the zone itself, prices are pushed down. Next time again prices entered into this, because there is some supply is there, which pushed the price a little below. Not a significant, but little below. After that, maybe demand might have been increased and then the zone is broken. That is a different story. But now this is a valid zone. But previously, whatever we have drawn, that is not valid. So that's why you have to remember this solution. This is a workaround solution. And when the solution is useful, those whoever is using TradingView as a free version, you cannot customize the times. So for them, this is the solution. Okay, there is some less inaccuracies there, very less, a minute level, or we can say almost negligible level, because we are ignoring that 15 minutes candle. But if we want to get a perfect solution, what we have to do? So before we look into a perfect solution, let us see, do we have any other similar kind of problems are there for other time frames? Let us look into that. Converting daily data into 1 hour, that means 16 minutes chart, will result 7 candles. Out of these 7 candles, 6 candles, first 6 candles are 60 minutes candles. But the 7th candle is only 15 minutes duration. That is our residual candle. That means a leftover time candle. So because of that 15 minutes residual candle or leftover candle, definitely it will affect our analysis. So that's why if one workaround solution I already explained, same thing you can apply here. Just ignore that last 15 minutes candle. Or assume that 15 minutes candle is also part of the previous candle because it is a small duration. And even converting daily data into 30 minutes chart will result 13 candles. Out of these 13, first 12 candles are 30 minutes duration candles, but the last candle, that is 13th candle, is only for 15 minutes duration. Why we are getting all these problems? Because Indian stock market is having a trading hour 6 hours and 15 minutes. The last 15 minutes is creating a problem for us. Of course, we identified a solution, but just ignoring that last residual candle. And what about the other time frames, 15 minutes and 5 minutes? We don't have any issues because the 15 minutes, the last 30 minutes again divided into 15 and 15, two more candles we get. 5 minutes also we get, divide 30 by 5, we will get 5 more extra 5 minutes candles. So that means exactly the time frames are matching for all the candles for 15 minutes time frame and 5 minutes time frame. That means there won't be any residual candles for 15 minutes time frame and 5 minutes time frame. Because perfectly all the time intervals are defined, we don't have any issues with 15 minutes time frame and 5 minutes time frame. The issues are there only with 30 minutes, 1 hour candle and 2 hours candles. Then how to solve this problem? What is the solution? If you are looking to the trading hour as 6 hours and 15 minutes, if you are calculating based on the hours, we will see the problem. To avoid this problem, instead of calculating in hours, calculate the total trading duration in terms of minutes. That is the solution. So the total trading minutes in a day are 375 minutes. Earlier how we calculated? 6 hours and 15 minutes. Now instead of 6 hours and 15 minutes, you are saying the total trading duration in a day are 375 minutes. The total trading minutes in a day for Indian equity market is 375 minutes. Okay, if you convert into minutes, how we get the solution? That is what you might ask. Yeah, the solution is something like this. Please listen carefully. Divide 375 with 125 minutes. Now it will result exactly 3 125 minutes candles. There is no residual candle. That means there is no leftover time candle. Exactly the entire time duration is divided into 3 candles. But the duration of each candle is 125 minutes instead of 120 minutes. Instead of 120 minutes, the candle duration is going to be 125 minutes. That means whenever you want to refer 2 hours chart or 2 hourly chart, instead of 120 minutes, refer it as a 125 minutes chart. Now all the candles are having exactly the perfect value, equal value. So 125 minute candle chart is nearly equals to 2 hour candle chart. But the advantage here is all the 3 candles in a day are having exactly the same duration. That is what we should observe. Similarly, divide 375 with 75 minutes. That will result 575 minutes candles. If you divide 375 with 75, it will result exactly 575 minutes candles. And this can be used instead of using 60 minutes candle or 1 hour. Whenever somebody says 1 hour chart, you can refer 75 minutes chart. Because 75 minutes candle chart is nearly equals to 1 hour candle chart. It is not exactly equal but nearly equals to. Why we are converting like this? Because Indian stock market is having 15 minutes extra before closing the stock market. So that is the reason why we changed the time frame slightly, that is suitable and also not having any residual candle inside the candles. Among the candles. And similarly, divide 375 with 25. That will result 25 minutes candles. There won't be any residual candle. That means there won't be any leftover candle. Leftover time candle. And this 25 minutes candle chart is nearly equals to 30 minutes candle chart. If anybody wants to analyze 30 minutes wise, you go for 25 minutes candle chart in Indian stock market. And Divide 375 with 15, will exactly get 25 15 minutes candles. So we don't have any issues with 15 minutes, even 5 minutes also. If you divide 375 with 5, it will result 75 5-minute candles in a day. Every day we get 75 candles for 5 minutes. Similarly, every day we get 15 a minute candles, that is 25 candles, 25, 15 minutes candles we get. If you divide it by 25, every day we get 25, 15 or 25 minutes candles. Similarly, if you divide it by 75, every day we get 5 75 minutes candles. Similarly, if you divide it by 125, every day we get 3 125 minutes candles. That is how the number of candles will be changing when you are changing from one time frame to another time frame. Now, based on this, let us look into this chart. How many time frames? And if you look into the Indian stock market and global stock market, there won't be any difference for daily and above. Daily and above means day-wise, week-wise and month-wise. That is daily time frame, weekly time frame, monthly time frame, quarterly time frame, half-yearly time frame and yearly time frame. There won't be any differences between global markets and Indian market. The only differences you will be seeing on the hourly wise chart and minute wise chart. Some differences will be there. In hour wise, we are using two types. The first one is 125 minute, that is equivalent to 2 hours, and next one is 75 minutes, that is equivalent to 1 hour. That is nearly equal. And minute wise, the 30 minutes, instead of 30 minutes, we are using 25 minutes in Indian stock market. So 25 minutes is equivalent to 30 minutes or nearly equal to 30 minutes. And 15 minutes as it is, no changes. And 5 minutes is also as it is, no changes. So these time frames we will be using in our analysis part. And even strictly speaking, during our supply and demand zone, we will be using the time frames monthly, quarterly, half yearly, yearly. Later, once you get experience, you can look into that. But during our course, we focus on monthly time frame, weekly time frame, daily time frame, 125 minutes time frame, 75 minutes time frame, 25 minutes time frame, 15 minutes time frame and 5 minutes time frame. Total 8 time frames. So we will be focusing on these time frames. How we will be focusing on these time frames and how we relate some of these time frames together, all these things you will be learning in the coming sessions. But time being, remember, these 8 time frames are very, very important for our supply demand zone price action course point of view. Once you get very good experience, you can also focus on quarterly, half yearly, yearly, even 1 minute wise or 3 minutes wise. Okay, now what we have to do with these time frames? So you have to practice. How to practice? Change from one time frame to another time frame. So instead of daily chart, look into the weekly chart, how it looks like. Draw a weekly demand zone and supply zone. After drawing, what we have to do? See the range between demand zone and supply zone. That is your target. See how much target. Is it increasing or is it decreasing? Compare it to the daily demand zone and daily supply zone. Same way you practice on the monthly also. Go to the monthly time frame. There you draw the demand zone, monthly demand zone and monthly supply zone. See what could be the range between these demand and supply zones. That means the target. What could be the target? Which target is having more target? Is it on monthly or is it on weekly or is it on daily? That way you compare. And also calculate the risk. Where we have more risk? Is it on daily or is it on monthly or is it on weekly? Not only day wise, even go to the hour wise. Look into the 125 minutes or 75 minutes. Or if you are using a free version of TradingView, you look for 60 minutes and look for 120 minutes. That is 2 hours and 1 hour charts. Similarly, look into the 15 minutes and 5 minutes. Always compare what is the risk. When in which time frame we are getting very less risk. That also you have to observe. These observations only will help you understand the concepts you are going to learn in the coming days in a much better way. If you complete these exercises, your mind thinking level will be slightly changed. And that change will help you learning the upcoming concepts in a much better way. That is the reason why you have to focus on the points I have mentioned. What points I have mentioned? Go to different time frames and observe is how the target, which time frame is having more targets. Similarly, in different time frames, which time frame is having a higher risk and which time frame is having lower risk. So that means where the risk is minimizing or where risk is maximized. And similarly, you practice the risk reward calculations part also. Previously, phase 1 we practiced. There is nothing wrong in practicing once again the risk reward calculations because that is the most important. Ultimately, once you get into the trading, your entire trading is based on the risk reward. So practice once again those concepts in different time frames. But primarily you have to focus the points I told you. Once again, let me tell you in case if you miss. What I want is I want all you people to observe which time frame the reward is more between monthly and 5 minutes. Don't go beyond that. Monthly, weekly, daily and hourly and minute wise. Minute wise of 15 minutes and 5 minutes is the least. And the second point you have to observe in which time frames the risk is very less or which time frame more risk is there. And I want you people provide these answers in the comment section. Then only I know whether you are practicing or not. If you are just listening my videos and without practicing, obviously that is going to hurt when you are really getting into the trading. Because at the end of the second phase, you will be in a position to trade on your own. But if you are in a position to trade on your own is not enough for me, according to me. If you are in a position to trade in a perfect way, that is what I want from you. If you want to trade in a perfect way, you have to practice a lot. So please do this exercise. For that, I am giving you 2 days time. That is today and tomorrow. And after that, we will be getting the next video related to the practicals. Whatever the exercise I have given you, let me show you practically from my side also. If any mistakes are there in your analysis, at least you will understand. That is the reason why my practical session is also important. You are practicing. Remember, because my practical session is there, you should not stop practicing. You have to practice. Then only you will identify your own mistakes. Mistakes are there, then you will be having a real learning. Please remember. Always you learn in a much better way when you are making more and more mistakes while learning. But while trading, you should not make mistakes, or the mistakes should be at minimal level. So after 2 days, my practical video will be released, and before that, you have to complete these exercises, whatever I told you. That is very, very important. So this is about part 1 of lesson 11. So in the part 2, let us look into the practicals. So let us all meet again in our next video. Thank you.